You think Wall Street uses AI to pick winning stocks. It doesn't. Not really. The smartest hedge funds on Earth barely use AI to predict the market. What they're actually doing is stranger, and it quietly decides how much your money earns. Insiders have a name for it: operational alpha. Normal alpha is the old game. Beat the market by picking better. Operational alpha is different. It's not about predicting the next move. It's about building a better machine. A machine that runs the entire firm faster than everyone else. Take 2 Sigma, one of the biggest quant funds in the world. In 2026, they gave a sweeping order. Every employee must use AI. Not just the traders. Everyone. The AI cleans data, writes code, speeds up research. Tiny gains, everywhere, all compounding. Here's the logic. A researcher tests ideas 20% faster. A data pipeline runs 30% leaner. On their own, small. Stacked across a whole firm, enormous. The winners aren't building the best model. They're building the best machine for building models. And the most valuable AI on Wall Street? It doesn't pick stocks at all. It hides orders. The real money is in execution, software that slices one huge trade into tiny pieces, so no other algorithm sees it coming. But how do you train an AI to trade without losing millions? You fake the market. Nasdaq uses deep learning to build synthetic order books, near perfect copies of real market behavior. The AI practices there. No real money at risk, no moves leaked to rivals. Now the strange part, all this AI is making Wall Street worse at its job. Bankers lean on AI so hard that their own thinking is fading. There's a name for it: cognitive atrophy. The fix? By the end of 2026, about half of finance firms plan AI-free tests, just to check their people can still think. There's a bigger danger. What if every fund uses the same AI, trained on the same data, then they all make the same mistake at the same moment? Experts warn this raises the risk of sudden correlated crashes. One shared blind spot, millions of trades, gone in an instant. So where do you fit in? Closer than you think. The wall between Wall Street and your phone is collapsing. Retail apps now use the same execution endpoints as the institutions. New AI platforms bring constant rebalancing and tax loss harvesting to regular investors, tools that used to cost 6 figures. Here's what that means for your money. Elite tools are coming to the masses. Your account could soon be managed in real time, not reviewed once a year. But, and this matters, better tools do not erase risk. The market can still crash. Discipline still wins. A faster car still needs a careful driver. And ignore the hype you'll hear elsewhere. AI is not autonomously running these portfolios. Not yet. The real systems are hybrid, narrow AI advising inside strict human-built rules. Anyone selling you a fully autonomous money robot is selling a myth. In fact, regulators are cracking down. The SEC has charged firms for AI washing, slapping the word AI on the label to charge higher fees when humans were doing the work. If a service brags about AI, ask what it actually does. Last time, I gave an AI $1,000 of my own money. Now you know how the pros really play. If this changed how you see your money, subscribe. We follow the machines so you can keep up with them. Quick honesty. This is education, not financial advice. I'm not your advisor, and the sources are in the description. Think for yourself. Wall Street is struggling too.